All right, guys, so this one is specifically for gold. And I'm going to show you guys exactly how it works. So first of all, I'm just going to draw a normal trend, right? So let's say, for example, it starts off like this, and then we then get an uptrend, okay? A very simple and basic uptrend, something like this, okay? Cool. And then I'm just going to draw when the market reverses, a correctional wave. So something very simple as well, something along the lines of this. All right, cool, guys. Very straightforward. So this is just a basic trend. If I was to draw that, I mean, if you was to see that and zoom out, right, you're literally just looking at that. It's the same exact thing. Yeah, it's just that if you was to zoom into this particular trend, you would see this kind of a formation. All right, so this kind of a formation is known as an Elliott wave. Elliott waves can come in drives of 3. It can come in even 7 and 9 as well. But essentially, the point of this strategy is this: you are trying to catch the wave up as well as the wave down. Okay, so you're trying to catch the wave from the bottom, so literally where the market reverses, and you're trying to catch each and every retracement if possible. So something like this point, this point. Oh, no, sorry, not that one. This point. All right, cool. You're trying to catch the sell here as well as here, and obviously the entire move down as well. So you're literally trying to catch every retracement of a certain trend, as well as a swing to the opposite direction. All right, guys. So with that being said, I'm going to show you guys some live examples of how this is going to work. Now, what we're going to use to catch these little breaks and retests is a very simple strategy. So I'm sure a lot of you beginners know about support and resistance, and I know the institutional lot probably laughing at support and resistance, but there's a reason why it works to an extent, and it's because, right, when the banks essentially create a resistance level, it gets taken out. When it gets taken out, the banks have sell orders that are stuck in the market, so they have to come back to that previous resistance level to break even on their sales, and that's what creates the illusion of a support and resistance, which is what the retail traders know. And if you're a beginner and you don't understand that, don't worry, you're going to learn about it in the academy. So this is the kind of concept we're looking at. So let's now have a look at it, you know, in the live market. So what I'm going to be using to help me out when it comes to reversals is 2 very straightforward indicators. Now, if you guys have ever seen any of my previous sessions, my previous trading trainings, you would have known the indicators that I use for my personal strategy. If you guys don't know about it, literally message me or message your upline, and they'll hook you up with these particular indicators. So there's 2 of them, okay? Now, the one that is blue, this one actually goes blue and white. All right, it's very straightforward. When it's white, you're looking to sell, and when it's blue, you're looking to buy. Now, the yellow one, it stays yellow, but this is the one that we use for the crossover. And where the market crosses over, that's where you're trying to catch the swing in the opposite direction. Now, check this out. This was a very clear uptrend. Okay, so a very clear uptrend. As you can see, it's creating higher highs, higher lows. Okay, but what happened over here? What happened right here? This previous low got taken out. So that means the market broke structure. It took out the previous low. That means it broke structure. That means there is a good indicator. There's a good suggestion that the market may start to reverse. That isn't enough for us to enter the market. What we want to see, right, is these 2 indicators basically cross over. Okay, we want those 2 indicators crossing over with this particular indicator, the simple moving average, being white because we're looking to sell. So let's go ahead a few more candles and let's see if that precise thing happens or not. As you can see, the 2 indicators, they're getting closer. This suggests that the actual trend is coming to an end. The trend is getting weaker and weaker. The further apart the 2 indicators are, the stronger the trend. The closer they are, the weaker the trend. Okay, so they're getting closer. That means this trend is coming to an end. That is suggesting that it is about to reverse. Okay, so we just want to see the crossover. Bang, they're touching right here. We're ready to enter the market on the crossover. So we're going to get our short position out. We're going to enter for a sell right here where the market crossed over. We're going to put our stop loss at the previous high, right? Now, if you guys are institutional traders, you should know how to minimize stop loss using your knowledge. But for the retail traders, as well as the beginners, I'm going to keep it very straightforward and simple. So your previous high could be this high over here. It could be this high over here. And if you wanted to go super safe, you could go over there. I'm just going to go ahead and just put it up here, for example, okay? Now, my take profit is going to be the previous low. The previous low, as far as I'm concerned, is this area over here, right? something along these lines. Okay, so that's going to be the previous low. Cool. So now let's see what happens. So we've entered a trade for a sell. We're expecting the market to reverse and go down, right? And boom, it starts to go down, right? So either you would have broken even, or if you took the trade out, you would have caught a nice 1 to 1.5. Had you taken it at the previous low like that, you would have got a nice 1 to 2.6, which is very, very decent, right? Eventually, let's see now what happens. So now we've started essentially what is called a downtrend, right? Now in this downtrend, what used to be a previous level of resistance is now acting as a level of support. See the shaded area over here? What used to be a previous level of resistance is now acting as a level of, previous used to be a support is now acting as a resistance. It's struggling to get past this area. So that suggests that, these are the areas we're looking to enter. We're trying to catch these retracements, right? So even if we was to re-enter this particular trade, that should be valid. But wait, hold up. You could have caught this trade twice, right? You could have entered it here. When the market retraced at that support resistance level, right here, you could have entered it again. Literally the same exact setup, right? Same exact thing. Previous low is down there. Bang. You smash take profit twice. Now check this out. Remember the moving average? This is going to dictate when the market's about to reverse. So check this out. We had a downtrend. We literally had a downtrend. We had low, lower low, lower low, lower low, right? And now look what's happening. The moving averages are getting closer. They're getting closer. And then what happens? It crosses over again. And this time it's blue. Therefore, it's crossing over for the swing high. The swing high, guys. So we're going to get a long position out and we're going to enter for the swing high, right? Previous low is right there. Previous high this time round. You could either target this high up here, or you could go and target these highs up here. So we got a nice, 1 to 3.15. And let's see what happens. All right, cool. So market is struggling to go up. It goes up a little bit, it comes down. So basically you would have broken even. Now, if you would have looked at the moving averages, you would have noticed why that is. It is because, as you can see, it struggled to actually take off, essentially. The move struggled to take off. The moving averages, they stayed close and it actually became white. In between the move, it started becoming white. So that's where you'd be like, cool, let me actually reconsider this move because it's struggling to take off. It's staying white. So you would have actually broken even at any given area where the market went back to its entry point, knowing that, hey, look, the moving average is turning white. It's struggling to go up, okay? And then what happens? The market crosses over for the sell, all right? So this is probably known as a fake out to you guys. You'd have this kind of scenario and you'd go for that sell move, all right? So check this out. So you're going to go for this sell position right where the market crossed over. So right here, okay? Let's zoom out again. So previous high, and then we're going to take the previous low. So you could target this one or this one down here as well. Okay, so we've got a nice 1 to 1.5. And as you can see, it wicks it, comes down, and it's taken the profit. So now what are we in? We're in a downtrend. Why? Because we've taken out the previous lows. We're officially in a downtrend, right? So once again, you're going to look for those areas of support resistance where the markets are essentially trying to break even on their orders, right? So if the market's coming up to this area once again, you're going to try and catch that sell move down, all right? So where it came up again after it hit take profit here, right here, it hit take profit in one sweep move, it came back and revisited the area of support resistance. So you could have entered once again in any of these given candles, right? Again, same stop loss as last time. And then this time, obviously, take profit, you could have taken this one down here. And there's several lows down here as well if you decided to hold it. So at the very least, you would have got a nice 1 to 2, all right? So if you guys literally manage this trade properly, then you can catch win after win after win. Like after 3 months of backtesting with this strategy, I would say this strategy wins 9 times out of 10, right? This is now, what is it? It's now a downtrend. This is our area of support resistance. When it comes back up to that area, if it does, we should look for the sell. As you can see, it comes up again, right? Let it enter the box, boom. We're gonna enter for the sell position. Why is that? It's because it's a downtrend now, right? And we're trying to catch the move down, all right? So there you go. That's our take profit, previous low, previous high, my bad. And then let's see what happens. Market starts to come down in our favor. It starts to go into profit. Now check this out. Oh, went a bit too far. Check this out. So right here, if you were looking at the moving averages, you can see that it's getting closer and closer and closer to the point where literally it's about to touch again. At this point, you go ahead and take your profit, right? Knowing that, look, a reversal is pending right now. So you go ahead and take your profit. Why is that? It's because the market's literally about to reverse because the moving averages are getting closer. So let's wait for them to touch. My computer's moving a bit slow. All right, cool, it's turned blue. We just want the touch, bang. We got the touch right there. And we go ahead and enter the market. Cool. So once again, previous low, take profit is going to be way up here this time because that's the previous high, support resistance level. And then what happens as they cross over, bang, you smash take profit, literally zero drawdown, straight into profit. Had you taken the stop loss at the previous low, which was right there, this could have been a 1 to 5, right? Risk 2%, get back 10% of your account. Very, very decent. What are we now in? We're now in the start of an uptrend, okay? And what happens, the market reverses back down to a previous support resistance level. See this? See these wicks here, these levels? You line it up, you can see it literally reacts off of that level. So you could have caught another buy on this particular move. And then let's now see what happens next. We want to see, now you can see these moving averages, they're staying further apart. Cool, valid. We're in an uptrend. We're definitely in an uptrend, right? What we're trying to see now is we're trying to see this market take out this area, this very strong area. We know if it takes out this area, it's going to fly up. All right, guys, so let's check it out. Let's see if it does. So we're waiting. It's struggling, boom. It's starting to take out the area. It's now finally broken those, previous highs up there. All right, so what would you do? When it broke the previous high, you would look to catch the re-entry. The moment it revisited that area, you would try to catch the re-entry to then ride the move up, knowing that, this is the start of an uptrend. As you can see, it gives you several opportunities over here as well. And once again, coincidence, it is a previous, area of resistance, an area of support. So you could have caught this particular move and then, swung the move up. Look, it literally came back to the previous area of support over here to give you that opportunity to enter the market. Now, if you guys are institutional traders, you would know that there's inefficient price action here, which is why the market came back down to this particular level. So if you use it in conjunction with your knowledge, you can catch some insane trades. Like with this particular one, had you entered at the 50% of the inefficient price action, you'd have literally wicked this particular trade. Previous low is literally there, right? And then obviously take profit will be the previous high up here. That's like a potential 1 to 8 risk to reward. Yeah, and boom, smash take profit, barely any drawdown. If you guys are wondering what is institutional trading, I suggest you go to a website called howdoitrade.com/2020 course. And if you guys are in the academy, you should have access to this website so you can learn exactly how the banks are trade, how Banks of America, JP Morgan, Goldman Sachs, how all of those guys trade. Now check this out, after the market broke that area, it gives you the opportunity as it came down for the retest to enter in a second position and then ride the move up yet again. So this time the previous low is going to be down there. And then obviously your take profit would be this one here. So a nice 1 to 2. We don't know where the next highs are going to be because I can't see any other highs on this side, right? So you just got to go off of what the market is telling you. So you go off of areas of support resistance and remember to refer back to the moving average. Check this out. The moving average just turned white. As you can see, it's turning in. So what does that suggest? It suggests that market is getting weaker. Trend is getting weaker. Potentially, there's going to be a reversal in our hands, right? So let's see. Does it go white? Yes, it does. Is it going to cross over? Yes, it does. Bang. It crosses over right here, as you guys can see. Yeah. And so then obviously, again, you work out your support. Your stop loss, take profit and whatnot. And now the market starts to come down again. Literally, it's the easiest thing, guys. You're catching the trend in each and every level, and you're catching the reversals when they take place. And it works like a charm when it comes to gold, Literally, previous high, previous low, down now. Like this is a nice 1 to 4. So risk 2%, get back 8%, right? Now check this out. Again, now it's gone blue. That means the market is getting weaker. So I'm taking my profit. I'm going to get out of this trade at a nice 1 to 3.3, right? Because why? The market's getting weaker. Cool. It's continued this downtrend, right? What does that mean? That means we've got to refer back to our support resistance levels. So again, as you can see, wick. There you go. Wicks it once again as it breaks through. It always gives you the opportunity to re-enter the trade, even if you miss it, right? So you could have entered here, again, work out your stop loss, take profit. And guys, it happens over and over and over again, right? Oh, my bad. For this one, you entered on the re-entry. There you go. Low, previous highs right there. A nice 1 to 5. Yeah. If you know your institutional trading, again, you can improve the risk to reward, and it just happens over and over again. And if I show you guys like the full on examples, hold up, you guys will be like, what the hell? Let me close everything. So as you can see, like what do we take? We took one loss / break even, and the rest of them were all wins, right? Well, check this out. I've been backtesting this for ages, and like I said, for every 10 trades, 9 of them win, 1 of them lose. Yeah, so here we've got a downtrend, you're catching all the moves down, market reverses. As you can see, the indicators cross over, you catch the move up for the buy, crosses over, catch the move down for the sell, crosses over, catch the move up for the buy, down for the sell, crosses over, up for the buy, and happens over and over again. I'll show you guys some trades that, you know, I caught this week, or this last week, 2 weeks. So as you can see, this was an uptrend, market crossed over right here. Let me close everything. See that crossover right there? Boom, you catch the sell move down, and that was an insane trade, right? That was literally like, what was it? Hold up. Long term, it had the potential to be a 1 to 9. Yeah, and these are some insane trades I caught. Here's another example, so check this out. Market reverses, crosses over right here, you enter the trade there, you take it to the previous low, which is down here, you take it to the previous high, which is either here or here, it's up to you, and then bang, again, you catch an insane trade. This one was a 1 to 8.65. So like you risk 2%, you get back 18% of your account. And that is literally it, guys. And this happens over and over again on gold. It's a very simple break and retest combined with the market reversal strategy with the moving averages that I've taught you guys several times. So what I want to show you guys is the power of these trades. Even if you're catching like 1 to 1s, 1 to 2s, 1 to 3s on a regular basis, right? You're winning more than you're losing. There's either 2 scenarios, right? You can have a high win-loss ratio, but a small risk to reward, or you can have a high risk to reward or a small win-loss ratio. But if you combine both when it comes to the strategy, you guys are going to be laughing. Like, look at this, 1 to 4, 1 to 6, 1 to 6, 1 to almost 9, you know what I mean? So if on average, let's say you're catching a 1 to 3, for example, right? Which with every single trade, and you're risking 2%, you're making about 6% of your account per trade.